Good evening, students. I'm so sorry today for my bad health and bad throat. So we try to, take as much as possible today, but just be, just tolerate with my voice little bit. So we were on the math chapter. Can anybody quickly revise what are the adjustments that we have learned in the last class before we proceed further?
Yes, MAT. MAT is applicable to both the domestic and the foreign companies. We have to pay MAT at the rate of 15% tax rate. The exclusions are for domestic companies, companies which are exercising 115BA and 115BAB, MAT is not applicable, and insurance business, MAT is not applicable. And for foreign companies opting for a presumptive taxation under Section 44B, BBA, and BBB, MAT is not applicable. And foreign company resident of a country with which India having DTAA, and it does not have any permanent establishment in India. Foreign company resident of a country with which India does not have DTAA, and it is not required to register under the Companies Act. Then MAT is applicable when tax on total income is less than the 15% of the book profit. Book profits are deemed to be the total income, which means all the provisions applicable to the total income will be applicable to the book profit also. And then we have gone through the adjustments. Book profit, first we will be taking book profit, net profit as per the P&L account prepared as per the Companies Act, and if it is a insurance or banking company, then respective acts. Then we will add a less adjustments as per the 115 JBB. Income tax, provision for income tax, which includes income tax, surcharge, and cess, interest on income tax also. We will add back, and deferred tax we will add, and we will reduce the deferred tax credit. Amount transferred to the reserves, we will add back the amount transferred to reserves, and we will reduce any amount withdrawn from the reserves. Then provision other than certain liabilities. Certain liabilities is liability in present year. We will add any provisions for uncertain liabilities, and we will less any amount withdrawn from the provisions. Then provisions for loss of subsidiary company, we will add it. Then transfer to revaluation reserves, we will add amount transfer to revaluation reserves, we will add it. We will reduce the amount withdrawn from the revaluation reserves. Provision for diminution for value of the asset, we will add it. Dividends paid are proposed to be paid, we will add it. Depreciation, first we will add the depreciation as per books of accounts, including the depreciation on revalued asset. Then we will reduce the depreciation as per the books of accounts, excluding the depreciation on the revalued asset. So therefore, the net effect will be, we will be adding back on the depreciation of the revalued asset. Then income exempt under section 10, 11, 12, we will add back the expenses related to such income, and we will reduce the income related to this. Notional gain or loss on transfer of shares of special purpose vehicle in exchange of units of business trust, and notional loss due to change in carrying value of the units, we will add the loss and we will reduce the gain. For actual gain or loss on sale of units of business trust, we will add back the gain and we will less the loss. Share on members in AOP, BOI, where no tax is payable under Section 86. Any expense we will be adding back, and we will reduce the any income. Income of a foreign company, in the nature of dividend, interest, royalty, fees for technical services, where that income is chargeable under section tax under section 115A or under DTA. If it is less than 15%, then we will do it. And for capital gain on securities, we will always reduce it. Brought forward business losses and unabsorbed depreciation for a normal company, lower of the business loss or unabsorbed depreciation. In case of a company which has gone for insolvency, aggregate of the unabsorbed depreciation and the business loss. In respect of royalty chargeable under section 115 BBF, we will add back the expenditure and will reduce the income. It is taxable at the rate of 10% under section 115 BBF. That's all. Then we have gone through the example. मैम मुझे एक डाउट है मैम, क्वेरी है वहाँ पे बुक प्रॉफिट और डीम टू बी टोटल इनकम का कब बोलते हैं ना मैम, उसका मीनिंग क्या है?
So, book profit will be deemed to be the total income basically means that whatever the uh, collection mechanism applies for the total income will also be applicable for the book profit. So let's say, for example, advance tax is applicable on the total income. So in case of the book profit also, the advance tax will be applicable. If you don't pay the advance tax, then there will be the interest under 234B, 234C, like that.
Yes, ma'am.
So it will be considered like a total income itself. Okay?
Okay. Okay.
Yeah. So let us solve one question from the module. So this is the question, and you're required to give for each of the adjustment, like what will be the implication under the MAT. Okay, so this is a resident company which has earned a profit of 15 lakh after the debit or credit of the following item to the statement of the P&L. Provision for the loss of subsidiary 70,000.
We will add back, ma'am. Provision for loss of subsidiary company.
Yeah. So provision for the loss of the subsidiary we will add back because this is the specified adjustment in the explanation one. Provision for doubtful debts.
Ma'am, doubtful debts, it is specifically not mentioned, but whatever it is applicable for the total income, it will be applicable. So provision for doubtful debt will not be add back allowed, right, ma'am?
Yes. So provision for doubtful debts again will not be allowed. So it's a specified adjustment because the reason is this is particularly not allowed because it is the amount for the diminution in the value of any asset. So provision for the diminution in the value of any asset, do you remember we have to add back, right? So if you recollect what I told you in the class with respect to the specified adjustments that we had done, I had told you that any provision which is there for the diminution in the value of the asset has to be added back. It's a specified adjustment. So that is the reason why we have to add back. So you have to write reason for everything. Then provision for income tax.
We will add back, ma'am.
Correct. Provision for income tax will add back. Provision for gratuity based on actuarial valuation.
Ma'am, it is an ascertained liability, right, ma'am? If it is paid, then we don't have to make any adjustment.
Correct. So provision for gratuity based on actuarial valuation is an ascertain liability. Very good. So the same will not be added back. Only the provision for the unascertain liability needs to be added back. Right? Then the depreciation.
We will add back the depreciation in
Correct.
the question, and then we will reduce it later.
Correct. Then interest to financial institution unpaid before filing of return.
We have to add back, ma'am, interest on financial institution,
We have to add.
but it is in the PGBP. If it is not
Correct.
paid, then we have to add back.
Under book profit, we will not add back because this is something the adjustment or the disallowance made under section 43B, not under the MAT provision. So for the purpose of calculating the book profit, we will not add back. If you have to calculate the normal income, then you need to add back, right?
Yes, ma'am.
Penalty for infraction of law.
For MAT purpose, we will not add back, ma'am, because for income tax, they have said only interest, surcharge, and cess, not penalties. But for calculation of total income, book profit, we have to reduce from it.
Correct.
Penalties are not.
So when we calculate the total income, you need to add, but for the book profit, as you rightly mentioned, we don't need to. Then items credited to the statement of P&L profit from a unit established in SEZ.
We don't have to make any adjustments. Right?
Yeah.
No adjustment.
Correct. So here, a profit from the unit established in SEZ, even though it is exempt under 10AA under the income tax, but here for the MAT purposes, there is no exclusion, right? Then share in the income of an AOP as a member.
We have to less the income, ma'am, because if it is not payable under Section 86 AOP as a
Correct.
member, we have to reduce.
Correct. So share in the income of the AOP as a member, where the AOP has paid the tax and no income tax is payable in the hands of the member under 86, then in that particular case, it will not be included in the book profit. Next is income from the Unit Trust of India, units of Unit Trust of India.
We will reduce it, ma'am. Actual gain or loss from the sale of units of business trusts. We will.
No, this is not business trust. This is units of UTL.
UTI, there is no specific any
Correct.
adjustments.
Correct. So here it will not be excluded. This will be included. Then long-term capital gain on sale of building.
No adjustments, ma'am.
Correct. No adjustment for this as well. Then depreciation includes 1,50,000 on account of revaluation of the fixed assets.
So when we are reducing, we will add back the depreciation, and while reducing it, we will not take into account of devaluation of the fixed asset.
Correct.
Depreciation.
Depreciation as per income tax rule is 280.
We have to ignore it. Depreciation as per
Correct.
books of accounts only is done.
Correct. Brought forward loss as per books of account of the company is 10 lakh, which includes the unabsorbed depreciation of 4 lakhs.
Lower of the brought forward losses and unabsorbed depreciation, which is 4 lakhs unabsorbed depreciation.
Correct. The AOP of which the company is member has paid the tax at maximum marginal rate. This we already considered. Provision for income tax includes 45,000 of interest payable on income tax.
We will reduce, ma'am. Even for interest on the income tax, we will reduce it.
Sorry, what?
We will reduce it. We will add back
Yeah. So we
45,000.
have already added
Already,
the provision for income tax. So we'll
so it
also
is
add,
included.
yeah, this will be
It
included.
is already included. In.
Fine. Any questions?
No, ma'am.
Yeah. Okay. So let us now move towards the next part. Let me just reshare the screen. Yeah, I'm so sorry. So let us now move towards the next part, which is the adjustment of book profits or adjustment on book profit in respect of the companies which have opted for the Ind AS compliance. Okay. So what is the Ind AS compliance? Like which companies are required to comply with the Ind AS? Yes.
Listed company has to comply with India's law.
Correct. 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 So basically, the companies which are required to comply with the Ind AS have to make certain more adjustment in the book profit, right? Why? Because so they have like different set of principles for maintaining their books, right? And they are required to maintain as per the Ind AS, right? So the income tax has come up with the different provision in respect of, or the additional set of adjustment for the companies which are opting for the or which are required to comply with the Ind AS. So now what are the additional adjustments required for them? Let us look at it one by one. Okay, so let's just write additional adjustment to book profit. Fine. Now what are these? Sorry. What are these additional adjustments required for the India's compliant companies? So, number one is items which form part of the OCI that shall not be reclassified to P&L. So, what is OCI?
Other comprehensive income.
What is other comprehensive income?
ये डायरेक्ट पी एंड एल में नहीं दिखाते मैम, पी एंड एल के नीचे सेपरेटली दिखाते, इट विल नॉट अफेक्ट ऑन द पैट ऑफ द कंपनी.
Correct. But sorry, what is it exactly? Why do we show it under like or what category of the items we show it under the other comprehensive income?
Revaluation reserve.
Correct. And why are we not showing it under the normal profit and loss account? Why are we showing it in the other comprehensive income?
प्रॉफिट जो नेट प्रॉफिट आता है, इट विल अफेक्ट इट, मतलब ये एसेट की वैल्यू बढ़ गया, लेकिन एक्चुअली कंपनी इज नॉट सेलिंग द एसेट at that point of time, so it does not represent the actual profit that the company
Correct.
is gaining.
Other comprehensive income of OCI. It is basically the unrealized gain or loss. So since it is not realized, it's unrealized, right? Revaluation, right? So that's the reason why I can't take it to the profit and loss account. If it is realized, I'll take it to the profit and loss account. If it is not realized, I will not be able to take it to the profit and loss account. Isn't it? So that's the reason why I show it in the other comprehensive income, which is OCI. Now, under that, there are two items. One is the items that will never be reclassified to P&L. And second are the items which will be reclassified to P&L eventually. Now, what the companies can try to do is, in order to reduce their actual profits, they may take certain items to the OCI that will never be reclassified to P&L. And with that, they will be able to avoid the minimum alternate tax. So that is the reason why, I'm sorry, that is the reason why the adjustments in the 115JB2A says that the book profits shall get increased by the amounts credited to the OCI, the items that will never be reclassified to PL. We don't need to make any adjustment for the items that will eventually get reclassified to PL, right? Because it is just a matter of time. Today or tomorrow, we will again, take it to the PNL. So when we will take it to the PNL, at that time, we will be booking that particular profit. But at this point in time, I'm not taking. So it's not that I will never pay the tax on that. However, in terms of the 115 JB, the items that will never be reclassified to P&L that may escape taxation. So I'm taking those particular items now in the addition to the book profit or adjustment to the book profit. Are we getting this particular point? Now you understood what is the reason for including it, right? So you can just write over here. So no adjustment for items that shall be classified to P&L in the OCI. Fine. Now here, what we are making the adjustment for items that will form part of OCI that shall never be reclassified to P&L. So whatever the credits are appearing in the OCI, in this part, you will add all the credits and you will reduce all the debits. Is this clear? Fine.
Yes, ma'am. Yes, ma'am.
Okay. Now, in this, you don't need to make adjustment for the following. So no adjustment for the amounts that shall be reclassified to the PL. Sorry, that will not be, sorry, that shall not be reclassified to PNL. So you have to ignore these amounts. Okay. What are these amounts? Number one, revaluation surplus for assets. So even though these amounts are forming part of the OCI, right, which shall not be reclassified to PNL for amounts under OCI. So even though they are never going to be reclassified to P&L, still I will not include this in the MAT adjustment. One of the item is revaluation surplus for asset. Why will I not include it?
Because transfer to revaluation reserves, we are already doing it. So it will.
No. So why we are excluding it is, see, we are going to add all the credits less all the debits, right? So here if I add in the credit revaluation surplus for an asset, then I am just adding the unrealized profit. The intention of capturing here this particular item is to prevent the escape of any item that has been put under this category. However, this particular amount, revaluation surplus of asset which is there, this is an unrealized income. I don't want to include it. If you remember in the provision also, if you see, we had not considered any notional incomes. We had not considered provision for diminution in the valuation of asset transfer to revaluation. So even when I'm doing the MAT adjustment, I will not include it. Are you clear about this reason?
Yes, ma'am.
Secondly, gain or loss from the investments designated at fair value. Investments, sorry, in equity instruments. Designated at fair value. Now, why again we are not including this?
It is also unrealized, ma'am, because we are measuring it at fair value, so it will be unrealized gain or loss.
Correct. So this is also notional in nature. So if you look at both the items, both of them are notional. So again, this is a notional gain or loss from the investment in the equity instruments designated at the fair value. So that's the reason why I will be ignoring these items of the OCI, that even though these will not be reclassified to P&L, I'm still going to ignore it. And when I'm going to recognize these particular items, so I'm going to consider these items in the year when the investment is actually transferred or when the assets are actually transferred. Fine. Is this clear?
Clear, ma'am.
Okay. Now, second adjustment that we will make is, so this was the first adjustment. Second is for demerger. So you have to add any amount debited to the P&L on distribution of non-cash assets to the shareholders in demerger. Right? So what will happen is during the demerger, we distribute the assets to the shareholders, right? It can be in the form of cash, it can be non-cash asset. Yes or no?
Yes, ma'am.
So when you distribute the asset to the shareholder, in the case of the resulting company, right? In the case of the resulting company, what will happen is the resulting company will recognize the assets and liability of the undertaking and will record it at values different from that appearing in the books of accounts of the demerged company. Yes or no? That is what under India's they have to do. They have to recognize it at the fair value, the
Yes, ma'am.
resulting company. So
Yes.
the difference between the fair value and the book value has not to be considered, or it will not be considered in the hands of the resulting company for the purposes of the book profit calculation. Are we clear? So that will not be considered for the purpose of the calculation of the book profit for the resulting company, I am saying. Because that is something, again, it is a notional gain or loss. Fine. It's a notional gain or loss. So we will not consider that particular thing. Correct? Is this clear?
Yes, ma'am.
Now, in the hands of the demerged entity, in the hands of the demerged entity also, there will be a difference between the fair value and the cash, or fair value and the book value, right? So that may be debited as a notional gain or loss to the P&L. So in the hands of the demerged company also, we will not allow. So Ind AS 10 provides that any distribution of non-cash assets to the shareholder in a demerger shall be accounted at the fair value. So the difference between the carrying value, the book value, and the fair value is taken to the P&L, which is with notional gain or loss. Correct? So this again has to be excluded from the books of the demerged company also. So in the hands of the shareholder as well as in the hands of the resulting company, this notional gain or loss will not be considered. Are we clear?
Yes, ma'am.
So let's just write here any amount debited to P&L and less any amount credited to P&L on distribution of non-cash assets to the individual. Clear? So this is in the books of the this is in the hands of which company? This is in the hands of the or in the books of the shareholder, right? Or resulting company also ignore the difference in book value and the fair value. Right? Is this clear?
Clear, ma'am.
Okay. The last adjustment that needs to be made in the for the India's compliant company is transition amount. Now, what is transition amount? So, in case of the company which is adopting the Ind AS for the first time, right? So, in the first year of the adoption of the Ind AS, the company would be required to prepare the financial statements for the reporting year as per the Ind AS. But it also needs to present a comparative financial statement for the preceding year. So as per the Ind AS 101, a company would be required to make all the Ind AS adjustments as on the opening date to make the comparative financial statement. Because in the preceding year, they were making as per AS. Now for this year, they need to make the comparative. So to make the comparative, they will have to do certain adjustments. Right? That's the reason now they can, make the comparative. So that is what is the transition amount. So because they will have to restate the financial statements of the preceding year. So the transition amount is the amount which is taken in the other equity. Right? Because all the adjustments that they would be making in the first year of the adoption of the Ind AS, they would be doing it by way of the other equity. All the adjustments they would be putting in the other equity to show the reconciliation between the previous years and the Ind AS now. So the transition amount will be taken on the basis of the amount adjusted in the other equity. So you can write here amounts appearing in other equity, excluding the capital reserve and security premium on account of transition from AS to Indias. Right? So this is what you will take as the transition amount. But you will, ignore certain items from this. So you will exclude certain items, excluding amount adjusted in the OCI under the head items that shall be reclassified to PNL. Right? So any amount appearing in the OCI under the head items reclassified to PNL, we will ignore that. Why are we ignoring that?
It is just a matter of time. Anyhow, it will be reclassified in the P&L and it will be
Yes.
taxed.
So therefore, these we will exclude it. So any which ways, when we are calculating the adjustments in the OCI, there also we are ignoring the items subsequently which will be reclassified to PL, because they will be included in the book profits in the year in which they are reclassified to the PL. So in the transition amount also we will exclude this. Fine. Revaluation surplus of asset. Again, for the obvious reason, why are we excluding this? Because these are only the notional gain or losses. These will be included at the time when actually the asset is disposed of and when there is the actual realization of profit. So these will be included in the book profit at the time of the actual realization. Next is notional gain or loss on investments designated at fair value. So whatever we were ignoring under the OCI, here also we are ignoring the same. Fine. Because again, we will recognize this at the time when the investments are actually disposed of. Next is notional gain or loss on the plant, property, equipment and intangible assets designated at fair value. Fine. Then adjustments relating to the investment in subsidiary or joint venture and associates recorded at fair value. So, notional gain or loss relating to the investment in subsidiary or joint venture or associates recorded at fair value. And the last is differences relating to the translation difference of foreign operation. Is this clear? Now we are going to take the one-fifth of the transition amount for the period of 5 years from the date of conversions. From the year of conversion. Is this clear? Any question, any doubt?
Clear, ma'am.
Fine. Shall we do a small question on this?
Yes, ma'am.
So that, this is again a past exam question that I'm going to take it up. So that will help you to understand exactly that, how do we calculate the uh, India's adjustments basically. Okay. So let me just paste the question here. Is the question visible?
Yes, ma'am. Visible.
Okay. So this is the Indian company engaged in pharmaceutical formulation and it started adopting India's in 2022. Following particulars are furnished for 31st March 2025. Book profit after adjustment of all the items specified under 115JB amounted to 52.26 lakh, except for the adjustment of brought forward losses for the year ended 31st March. Brought forward losses as per books of accounts. These are the losses given for 21-22 and 22-23 with the unabsorbed depreciation. And they have mentioned the business loss of 4.60 lakh, which is this, and 1.75 lakh have been deducted while computing the book profit under 115JB for the financial year 21-22 and 22-23 respectively. Then if you look below, it says the NCLT has admitted the application under Section 7 of IBC made by the financial creditor against the company for initiation of the insolvency proceedings on 31st March 2024. So what will be the impact of this?
Since it has filed for insolvency, we will be taking the average of the book, brought forward losses and unabsorbed depreciation.
Yeah, but what about what about this?
It is already detected in the financial, so no adjustments.
Yeah. So the amount which is there for the 20 basically the amount which is already deducted for the business losses which are there, right? This has already been deducted, right? So company which have gone for the IBC, we will take the aggregate of the UAD and the brought forward loss. But this particular company has already deducted the business loss in the financial year 21-22 and the financial year 22-23. So again, we are not going to exclude it, right? Because it's already deducted. So what we are going to deduct now is only the unabsorbed depreciation. Yes or no?
Yes, ma'am.
Fine. So only this will get deducted. So deduct only the UAD. Fine. Yes or no? Is it clear?
Yes, ma'am. Clear.
Okay. So here also I'm just writing deduct only the UAD as the brought forward losses are already deducted. Clear? Next is the particulars of OCI for the year ended 31st March are given rupees in lakh. OCI that may be reclassified to PNL. So under that we have different items which are given.
OCI, it may be reclassified to P&L, so we don't have to make any adjustments.
Correct. So we don't need to make any adjustment for this. So this particular amount which is there, this we are going to ignore. This may be taken to book profit in the year of reclassification. Clear? So we have to ignore this. Now OCI that may be reclassified to P&L. Changes in the fair value of equity instrument.
We will ignore it, ma'am.
We will ignore
Notional,
it.
notional gain.
This is notional. So we are not going to take it. Clear? So this
Yes,
will
ma'am.
be ignored. So I'm just writing here. Ignore. Right? Next, deferred gains on cash flow hedges.
We will reduce it.
We will add, right? This is credit.
We will add back. Add
Correct?
back.
Add to book profit. Deferred cost of hedging.
We will less.
Reduce from in book profit. Correct? Share of OCI of other associates.
We will add back, ma'am. It is not at fair value, so we will add.
Correct. So share of OCI of other associates, this is credit, we will add. Remeasurement of post-employment benefit obligation.
Add.
Correct. We will add this. Because again, this is in the credit. Revaluation surplus of assets.
We will no adjustment further.
This will be ignored. Clear? Then you have the transition amount as on the convergence rate stood at 52.50 lakh and including capital reserve of 8 lakh and adjustment of 4.5 lakh relating to translation difference in foreign operation.
From 52.5, we will reduce capital reserve and 4.5 foreign currency operations, 40 lakhs, and we will be taking a one-fifth for each for 5 years. Divided by 5,
Correct.
8
So
lakhs.
our
It is,
transition
we will
amount,
be,
correct. So out of the 40 lakh which will come, so from this 40 lakh, I will do divide by 5. Right? This will be allowed. And whether you will add this or you will reduce this,
reduce
it is credit.
credit, add,
So we will add it.
add it.
Correct? So we are going to add this. Fine. Assume the income tax liability is 9.2 lakh. Can you calculate the math for me? Based on what we have considered here.
मैम वैल्यूज पहले से लिखना पड़ेगा मैम, किताब में नहीं लिखा.
See, here we'll start with 52.26 lakh. Correct? So 52.26 lakh minus, we are going to do 4.9. Correct? Minus 2.2. Then this we have ignored completely. Then 7.25 add. Reduce 4.10. then add 3.20, add 4.45, and add 8. What is the amount that we are getting? 63.96 lakh? Yes or no?
Yes, ma'am.
63.96. Now on the 63.96 lakh, what is the MAT percentage?
15%. Ma'am,
Yes. Plus we will add cess or surcharge. Do we need
yes,
to
ma'am.
add surcharge?
No, ma'am. Only it is 15% of the.
Correct. So we'll add cess. Yes.
Yes, ma'am. Plus 4%.
So my MAT comes to 9.98 lakhs. Correct?
Yes, ma'am.
And my income tax liability is how much? 9.2 lakhs. Yes or no?
Yes, ma'am.
So 9.8 minus 9.2, I will have a MAT credit of rupees 0.78 lakhs. Fine. So when we are paying under the MAT and my income tax liability is lesser than MAT, I will get the MAT credit. Are you getting this point?
Okay,
I will
ma'am.
get a MAT credit. Now this MAT credit we can carry forward for the period of 15 assessment years. This MAT credit, I can carry it forward for the period of 15 assessment years and I will set it off against the liability under the MAT which I may have in the future. Are we clear? So whenever we are filing under the MAT, if there is MAT credit, I need to allow that credit in the year in again which I will be paying the MAT. Fine? Yes or no?
Yes, ma'am. मैम अगेन मैट के अंदर पेमेंट करेंगे तभी वो क्रेडिट एडजस्टमेंट होगा. नॉर्मल अगर मैट के अंदर पेमेंट नहीं कर रहे तो वो मैट क्रेडिट एडजस्टमेंट नहीं होगा. राइट. ओके.
So we'll take an example of this also from the module. So see, MAT is 4,15,000 to 20,23. Tax as per normal is 3,09,000. So there is actual tax paid is 450. So my MAT credit is how much? 55,000. Correct? Now in the next year I have 470 MAT, 410 normal tax. So I'm paying 470 as the actual tax paid. Right? So I will have a credit of 55,000 plus this year 60,000. Yes. So now in the next year again I have 380 MAT and 4 lakh normal. So what is the difference that is there between the two?
20.
20,000. So this is going to be allowed to me as MAT credit. So in the year in which my tax as per the normal provision is going to be higher, I will still end up paying what is there under the MAT. Because that is what my MAT credit is. Are we getting this point?
Yes, ma'am.
So I will not be allowed this entire 1,15,000. I'll be allowed only the difference between the two, which is 20,000. And to that extent, my MAT credit carry forward will go down. Clear?
Clear, ma'am.
Okay. Any question, any doubt? Fine.
No, ma'am. Fine, ma'am.
Okay. Now let us move further. The second part that we have to do with, let me just reshare the screen, is the buyback tax. Now, you would have studied about the buyback under the capital gain, right? What was the provision there?
याद नहीं है when the company buybacks the shares, it has to pay the tax actually first, but now it is taxable in the hands of the shareholder itself.
Yes. So, at the time of the buyback, what happens is when the earlier company used to buy back the shares, at that time, the company used to pay, if the shares were bought back by the domestic company, the company used to pay the buyback tax under 115 QB, so QA, at the rate of 20% plus surcharge and cess. Right? Now, after the amendment in the Finance Act, so post 1st October 2024, this has changed. So now you would have studied in the capital gain class. Now when the company buy back the shares, a domestic company buy back the share, the consideration on the buyback is taxable as deemed dividend under 222F, and no expenditure is allowed against the same. It is taxed in the hands of the shareholder. And for the receipt and for the cost, you're allowed the deduction of the cost under section 46A, which you can claim it as a capital loss, which can be set off only against any other capital gain. Do you recollect this?
Yes, ma'am.
Right?
Yes,
So
ma'am.
this particular buyback tax which used to be there, this is applicable only in respect of the transactions which have been undertaken prior to 1st October 2024. After that, this is not applicable. Are we clear?
Yes, ma'am.
Yes or no?
Yes, ma'am.
So this is not applicable after 1st October 2024. This used to be applicable earlier. Right? So it's just that, limited information that I wanted to give you. So if the transaction had taken place prior to 1st October 2024, then the domestic company had to discharge the liability on the buyback. The onus was on the domestic company doing that, and that used to take place through the buyback tax. After that, it is not applicable. Clear? So now in buyback is considered, the consideration of buyback is considered as deemed dividend, which is taxable under 222F, and the capital gain, the cost is taken as a capital loss under 46A. Clear?
Yes, ma'am.
Any question, any doubt? Fine.
Fine, ma'am.
Okay. Now, the next which is there is the provision of the tonnage tax scheme. First, I think we can just write it here, small part. Fine.
Yes, ma'am.
Okay. Now next is tonnage tax scheme. Now, what does the tonnage tax scheme says? So it is applicable to Indian resident companies. And this is the optional scheme for the shipping companies. So to whom it is applicable to? Indian resident company. Resident company means what? Any Indian company, or it includes even a foreign company having the place of effective management in India, which will be considered as a Indian resident company. Fine. Plus, it should have at least one qualifying ship. What is qualifying ship? Minimum tonnage of 15 tons, carrying minimum tonnage of 15 tons. It excludes these following: sea going vessel or ship which carries goods or services. Fishing vessels, factory ships, pleasure craft, harbor and river ferries, offshore installation. Then what you have to do is the income will be based on the tonnage. Sorry, this is not per ton. This is 29 per ton, exceeding 25,000 tons. Clear? So this is how you have to calculate. Now, here, what you need to understand is the tonnage which is there. If the last digit is greater than equal to 50, round it off to the next 100. If it is less than 50, round it off to the previous 100. And if it is less than 50, previous 100. Now, when you calculate this tonnage income, this works like the presumptive taxation. So, no deduction under 30 to 38 is allowed. No other losses are allowed other than tonnage loss. No Chapter 6A deduction is allowed. Only the depreciation is allowed. Fine. And tonnage loss can be set off against the tonnage income. Clear? Plus, like your tea coffee rubber development fund, here also they are required to transfer 20% of their profits to special reserve, which needs to be used only to acquire ship within 8 years. Are you getting this? Yes?
If it is not acquired within 8 years, then it will be taxable
Income. Correct. It will
income.
be considered as deemed income.
Deemed.
Yes.
But again, it is for up to 1,000. It is rupees 70 for 100 tons. Yeah, for rupees 70 per ton.
Sorry, I didn't get it. This
Up
one you are
to
saying
up to 1,000 tons. First वाला में table में first it is
70 per ton.
per ton.
Fine. It
No,
is
clear,
70 per ton. Okay.
clear.
So let us look at one example from the module. See, here the net tonnage is given. If it is 1020, it is rounded off to previous 100, which is 1000. 8563, this will be rounded off to 8600. Because if it is more than 50, then next 100. 22,368, it will be rounded off to 22,400. 37,525, this will be rounded off to 37,500. So you have to take it in the multiples of 100 only. Right? So here, what you will do is you will calculate the daily tonnage. Here the days are given. Now this is 1000. So what will be my daily tonnage? Up to 1070 per for 100 tons.
per
So
100.
700. Fine. Then it is 8600. So for 8600, it is less than more than 1000, less than 10,000. So 700 plus 53 for each 100 ton. Right? So how will you calculate? Yes.
We will take 700. Then after 8,600 minus 1000, 7,600 divided by 100 into 53.
53.
53.
53.
Yeah, 53.
Correct?
Yes,
So
ma'am.
this will give you answer 4728. Correct? Now you have to multiply this with 70,120 days. Right? That's the reason why, because this is daily tonnage. Then again you have 22,400, which is more than 10,000, less than 25,000. So what will you do?
22, 5470 plus 22,000 minus 10,000 into 42 per divided by 100 into 42.
Yeah. So this will give us 10,678. Multiply by 250 days. Then this is 37,500. So here it is saying 11,770 plus 29 for each 100 ton exceeding 25,000. 15,395. Right?
Yes, ma'am.
So this is how you have to calculate the tonnage. Clear? This is but the optional scheme. This is not the, like you have to mandatorily opt for this. This is the optional scheme which is given. Clear?
मैम टनेज लॉसेस क्या है?
Huh?
टनेज लॉसेस. टनेज.
See, if you have unabsorbed depreciation, see, you can still claim the depreciation, right? So the losses which will be there is basically nothing going to be but your depreciation. You are not allowed the any other cost, right? Under 30 to 38. So this is only the income that they are allowing you. This is going to be like a presumptive income. And plus you will get the depreciation, right?
ओके मैम, मतलब इस इनकम से डिप्रिसिएशन लेस करके अगर
Correct.
लॉस हुआ तो वो अनएब्जॉर्ब डिप्रिसिएशन के नीचे नेक्स्ट ईयर.
Correct. Yes.
ओके.
And if you recollect, if you recollect here, one more very important point under the MAT, whether MAT will be applicable on this company, the answer is no. So a company which is having the tonnage tax company, which is a tonnage tax company, the book profit or loss derived from the activities of the tonnage tax are to be excluded. Are we clear? So tonnage tax will not be applicable in, MAT will not be applicable in this particular case. Clear? So you can write it over here. This is excluded. Fine.
Yes, ma'am.
Okay. So this is about the tonnage tax. Now, if you do not utilize the amount which is put into the special reserve, or you are not utilizing it for the correct purpose, or you are buying the ship but selling it within the period of 3 years after buying it, then whatever the income which is there, right? The shipping income which is there, to the extent of reserves unutilized or misutilized divided by total reserve will be treated as the taxable amount. It's not that whatever amount is put will be treated as taxable. So it will be considered like this: your shipping income into the extent of reserves unutilized or misutilized divided by total reserve will be treated as my deemed income. Clear?
Okay, ma'am.
Okay.
Ma'am, once
Yes.
opted, we have to opt the scheme only, we can opt out of this also.
So a tonnage tax company, after this option is approved, is required to comply with this. Now, it can opt out. It's not that it cannot opt out, but in that particular case, it has to again make an application for that. So you have to renew it also. If you don't renew it, it will not be applicable. So it's not that it is permanently given to you. So it will remain in force for a period of 10 years from the date on which the option is exercised. Right? And it would cease to be effective if the company is not now anymore a qualifying company, or if make the default, or the company furnishes the declaration to the AO that it doesn't want to continue with this scheme. Fine.
Okay, ma'am.
Any other question?
No, ma'am.
Fine. So this is about the tonnage tax scheme. Okay. So let us take a break now for 10-15 minutes and then we get back. Yeah. We're done with the tonnage tax. Now we will move to the, like we have done with the companies portion. Now we'll start with the alternate minimum taxes. So you have done the minimum alternate tax, right? Now we'll start with the minimum alternate tax we have already done. Now we'll start with the alternate minimum tax. Okay. Now, in terms of the alternate minimum taxes which are there, so this is applicable to any other person other than the company. Okay. Fine. This is applicable to any other person other than the company who has claimed the deduction under the Chapter 6A, heading C. Which are these deductions? Yes. Which are these deductions? Yes, please.
ATC deductions.
No, not ATC.
Okay, 35 AD, 33.
No, no, no. Chapter 6A, heading C is basically deduction in respect of income. ATIA, IB. Do you recollect these?
Yeah, okay.
Or claim the deduction under 35 AD. 35 AD is under PGBP. Or claim the deduction under section 10AA. 10AA is for
SEZ, units in.
SEZ, right? And if the adjusted total income is greater than 20 lakh, then the AMT is applicable. Now, what are the exclusions from the AMT? AMT is not applicable in which situations? Yes. Where taxes payable or for individuals, HUF, AOP, BOI, not opting out of, meaning if the tax is payable as per 115 BAC, AMT is not applicable. Right? Yes or no?
Yes, ma'am.
Cooperative society opting for section 115 BAD or 115 BAE. Right? In these cases, the AMT is not applicable. Fine. Now, how do we calculate the AMT? What is the meaning of adjusted total income? See, under the mat, we were starting up with the book profits and then we were making the specified adjustments, right? Book profit means the net profit as per the P&L. But for the AMT, we start with the total income. So my adjusted total income is, the starting point is my total income as per the normal provision. Add chapter 6A deductions, heading C, in respect of incomes, right? So section 80 IA2, section 80 RRB. But this excludes deduction under section 80. What is the deduction under ATP? Yes. What is the deduction under ATP? Yes.
A cooperative society.
Cooperative society. Correct. So
Yes,
that is not to be added back. Add the deduction under section 10AA, SEZ, right? And add deduction under section 35AD minus the depreciation under section 32. Why are we reducing the depreciation under 32?
because normal PGBP also will be getting depreciation under 32. Under 35, we are getting 100%.
Correct.
So
On the capital expenditure, you get the deduction of 100% under 35AD. However, if I do not claim 35AD, still I am eligible to claim at least depreciation under section 32. So in that particular case, what I need to do is I need to at least reduce down the depreciation. Clear? Now, what is the AMT percentage? So on my adjusted total income, my AMT will be the AMT will be in respect of my adjusted total income 18.5%. What is the rate of the AMT? For the MAT, how much it was? 15%. But here it is 18.5%. Fine. So if my normal tax is less than 18.5% of the adjusted total income, AMT is applicable. Clear? For the IFSC units, it is 9%. So, and for the cooperative societies, it is 15%. Are we clear?
yes, ma'am.
Yes.
Yes, ma'am.
Even under the MAT, For the IFSC unit, it was 9%. I don't know if we wrote that. I think we should write here. Even under MAT, for the IFSC unit, it is 9%. Clear? Okay. So this is what is the AMT provision saying to us. Now, in case of the alternate minimum taxes, right? The same way you get the question for MAT, you can get it for the AMT also. So you may be required to compare the normal tax liability with the AMT, and you will have to determine that what is going to be applicable. Also, when the AMT is applicable, the adjusted total income will be deemed to be total income, just like the book profits were deemed to be total income, meaning all the advanced tax provision 234A, B, C will be applicable in this case. And here also, where you pay the tax under the AMT, so you will get the AMT credit, right? You will get the AMT credit, which is nothing but the AMT tax minus the normal tax. And this credit is allowed for again 15 assessments. Are we clear? Fine.
Yes, ma'am.
So I don't know if you recollect, we had done one question with respect to the storage of food grain, sugar, edible oil,
35 AD के बीच. Yes,
3580, right? Now,
yes, ma'am.
if you take the same question, you can calculate the tax in that question and compare it with the AMT. So if I take you back to the same question, let us see, because that will be the classic example for this. Yeah. So I'm not redoing the question again, but here I think we had computed the income chargeable under that PGBP, which was 28 lakhs, right? Now, I want you to calculate the AMT on the normal tax over here. So what would be the normal tax liability here? Because here there was a loss. So this was, I think, individual. And let us assume he has opted out of 115 BAC 1A. Right? That's the reason why he's claiming 3580.
Ma'am, for normal business setup, since he is not taking any 35 AD deduction or something, it will be normal. AMT will not be applicable, right, ma'am?
Normal business provision, it will be applicable, right? When you're
Normal
opting out 115 BAC 1A.
नॉर्मल बिजनेस प्रोविजन एप्लीकेबल रहेगा लेकिन एएमटी के लिए हु हैज क्लेम्ड द डिडक्शन अंडर सेक्शन 6 ए या फिर 35 एडी का नीचे डिडक्शन और आईटी लेकिन यहाँ पे बिजनेस फ्रॉम सेटिंग ऑफ वेयर हाउस एडिबल ऑयल के लिए तो एएमटी एप्लीकेबल नहीं होगा ना मैम.
Yes. So what you have to do is, see, you will start with this 28 lakh. First, find out what is the normal tax liability on this. Is it coming to 7,95,600?
Yes ma'am.
Correct?
Yes ma'am.
Now, in respect of, see how we are going to do it. So my normal taxes, just write here, refer question. What is the question number? 7 of PGBP. 7,95,600. Now, for the purpose of the AMT, what I will do is I'll start with my total income, which is 28 lakh. Right? Add deduction under section 35 AD. Now, what is the deduction under 35 AD? 85. Right?
Yes, ma'am.
Minus depreciation under section 32. Now, what will be the depreciation rate here? This was what? Capital expenditure in respect of land and building. And we
For
had
building,
excluded the land from it.
land building 10%.
Correct? So 10% on 85 lakh, which comes to 8.5 lakh. So what I will add back is 76.5 lakh, right? Yes or no?
Ma'am, 85 lakhs is deduction, total deduction under 35 ADA.
35 AD, yes.
It is not value of the building, right? तो
No,
depreciation
no.
value of the building पे लेंगे या deduction पे लेंगे?
नहीं नहीं, तो 35 AD में जो डिडक्शन है आपको कैपिटल एक्सपेंडिचर का ही मिला है ना. एंड द कैपिटल एक्सपेंडिचर दैट यू हैड इंकर्ड वाज in respect of the land and building itself, out of which you had excluded the value of the land. So there was the cost of the land which was given, we had excluded that. And then
Yes,
so there was the prior period capital expenditure also on building and the current capital expenditure also on the extension or reconstruction of building.
yes, ma'am.
Right? So we will take the depreciation on the entire 35 AD.
लेकिन जब वो डिडक्शन देंगे उसमें तो इनकम भी ऐड करके रहेगा ना मैम?
नहीं. So when you take the deduction here, what was the deduction?
ओके
The
ओके मैम,
deduction
समझ
was
गया.
the capital expenditure, which is prior to the commencement of business in respect of the building, plus the capital expenditure in respect of the renovation of building in the current year. And this was my 50 and 35, which is the capital expenditure, and my total deduction was 85.
यस मैम, समझ गया.
So under 80, IA, IB, IC, in those sections, you take the deduction of the profits. In 35 AD, you take the deduction of the capital expenditure.
यस मैम.
Right? So the depreciation that I have to claim is not on the profit but on the capital expenditure itself. Clear?
क्लियर मैम, क्लियर.
Now here, what will be my AMD? How much it comes to? Correct?
यस मैम.
Will there be surcharge?
यस.
How much will it be? This is individual.
1 crore 25%.
15%.
15%.
Correct?
2 crore से 25%.
Huh.
5 crore 27.
And then the cess of 4%. So my AMT comes to 23,12,167. Clear? This is obviously more than the normal tax. Yes or no?
Yes ma'am.
So AMT applies. So here I will get the AMT credit also, which will be 15.17 lakhs. Clear?
Yes, ma'am.
Fine. So this is all about the alternate minimum taxes here. Okay. Any question?
No, ma'am.
Okay. Next, we start with the taxation of the partnership firm.
मैम एएमटी मोस्टली बिजनेस इनकम के लिए एप्लीकेबल होगा ना मैम?
Correct.
ठीक है.
Right. So taxation of the partnership firm. Now, in respect of the partnership firm, what is the tax rate?
30%.
What is the surcharge? 12%, right?
12% is greater than 1 CR.
Clear? And the cess of 4%. Right? Now, in respect of the partnership firm, you get the deduction for the interest on capital and the remuneration paid to the partner. Right? Yes or no?
Yes, ma'am.
So, you get the deduction of that. So, in this particular case, when you talk about the partnership firm, you have to see now what are the limits for the remuneration and for the interest. And the partnership firm includes the LLP also. Yes or no? The partnership firm includes the LLP. Now,
Yes.
in order to get the deduction of the interest and the remuneration, sorry, remuneration, first we'll talk about the remuneration. So, the deduction of the remuneration, which is given to the partner, right? There are certain conditions as such. What are the conditions with respect to that? So, the first condition is for the remuneration, to the payment should be made to a working partner. So, conditions for deduction of remuneration to the partner. And what are the conditions? It should be paid only to a working partner. So, section 42. It should be paid to a working partner. The remuneration should be authorized by the partnership deed. Okay, it should be paid to a working partner and it should be authorized by the partnership deed. Now, what is the meaning of the working partner? So, a working partner is defined as one who is actively engaged in conducting the affairs of the business or profession of the firm of which he is a partner. Okay, and secondly, the partner, the working partner contemplates only an individual. It can't be a company. You can't give the remuneration to a company who is a partner. So only includes the individual. Okay. Then remuneration should not pertain to the period prior to the partnership deed. What do we mean by this? So let's say, for example, if the partnership deed is entered into from 30th June. Okay. Now the partnership deed says that it is to be, the partnership deed is effective from 30th June. And it says that the remuneration the partner has taken from the 1st April to 30th June. So as per the partnership agreement, the salary or the remuneration is given from the 30th June. But they have written in the agreement that it will be given retrospectively. So in that case, the remuneration is allowed only with the effect from the partnership deed. It will not be given, even if the partnership deed mentions that it will be given retrospectively, but the act says that it cannot be given. The deduction cannot be allowed for that. Are we clear?
Yes, ma'am.
So it has to be paid to a working partner who is an individual. It should be authorized by the partnership deed. The partnership deed should clearly mention, it should specify the amount of remuneration payable to each individual working partner. Either fixed payment or percentage of profits, whatever it is. It should be specified in the partnership deed. Right? And or some ratio should be given in how much, like if total remuneration will be given this in this particular ratio, it will be distributed. So something of that sort should be there, and it should not be pertain to the period prior to the partnership deed. Next is, it should not exceed the specified limits. Now, what are the specified limits? On the first 6 lakh, so for the book profit, up to first 6 lakh, or the loss, or in the case of loss, the deduction shall be 30%, sorry, 3 lakh or 90% of book profit, whichever is higher. On the balance, book profit, 60% of book profit. Now, what is the book profit here? The book profit here means the profit as per the PGBP before the deduction of remuneration. So, what does my book profit mean? Net profit as computed as per the head of PGBP, meaning considering all the deductions allowed there, right? And reducing any unabsorbed depreciation, because this is considered as the depreciation of the current year. So here, but this is exclude any brought forward losses and any remuneration paid to partners. Clear?
Yes, ma'am.
Now this is allowed as a deduction to the partnership firm. In the hands of the partner, what would be the tax implication? Sorry.
It is added as a PGBP income.
Correct. In the hands of partner, it will be taxable under 28(5). Right? And if the remuneration is not allowed as deduction to the firm, because let's say it exceeds the specified limit, it will not be added in the hands of the partner. Because then you can't be adding in the hands of the firm as well as the partner. Are we clear about the remuneration?
Yes, ma'am.
Second is interest on the capital. Interest on the capital to the partner. Again, this is allowed as deduction under 40B, subject to condition. What is the condition? It should be authorized by the partnership deed. It should not pertain to the period prior to the partnership deed. And third, rate of interest should be less than 12% per annum on all the balances of partner. What do I mean by all the balances? Capital account. Some firms maintain the current account of partner also, like they maintain a fixed capital plus current balance, plus any loan given to the partner. Loan given by the partner. On all the balances, it should not exceed the 12% per annum interest. Clear?
Yes, ma'am.
Okay.
मैम अभी सपोज सैलरी पेमेंट करना है लेकिन प्रोविजन में लिखे पार्टनर के लिए, तो
Hmm.
वो भी अकाउंट में ऐड होगा क्या मैम, ऑल बैलेंसेस ऑफ पार्टनर?
Yes.
ओके.
This particular interest is what will be the taxability in the hands of the partner. Taxable under section 28(5). Right? Same as remuneration. Yes or no? If the
Yes, ma'am.
interest is not allowed as deduction to the firm, if the interest is not allowed as deduction to the firm, then not taxable in the hands of partner. Clear?
Yes, ma'am. Clear, ma'am.
Next is partners remuneration or interest when the firm is paying it. It has to deduct the TDS under section
194T.
what is the percentage?
20%.
10%.
10%.
Greater than what is the threshold? 20,000. Fine? Yes or no?
मैम दोनों को मिला के 20,000 है मैम, इंटरेस्ट और
Yes. Yes.
ओके मैम.
Secondly, there is important thing called partner in representative capacity. Now, what does this mean? Let us understand. So, partner in the representative capacity means, so let us say, for example, that if the X is a partner in the firm, right? Or let us say there is ABC HUF, which is partner in the partnership firm XYZ. Let's say, for example, ABC HUF, this is partner of XYZ. And Mr. X is the Karta who represents ABCHUF. Right? Now, any interest paid on loan or any capital by the HUF to the firm. So, if any interest on loan or capital is paid, let's say this particular HUF has given any loan or capital as a partner. So any interest that is paid on this loan or capital, right, which is paid to X in representative capacity. In representative capacity, this will be subject to section 40. Clear? Fine? Yes or no?
Okay, ma'am.
Correct? Now let's say X has given the loan to ABC in personal capacity and ABC pays the interest to X. Now, will it be subject to 40B?
No, ma'am. Here, he is not the partner.
Correct. So, here, Mr. X has not given loan as a partner. So, 40B will not be applicable. Right? Clear? So if the firm gives it, if sorry, ABC HUF gives and the interest is paid to X in the representative capacity for the HUF, then it will be subject to 40. But if he has given the loan in personal capacity, then 40B is not applied. Clear? Next example, if let's say X is the partner of ABC, right? And Mrs. X, wife, gives the loan to ABC and ABC pays the interest. Right? But ABC pays this interest not to Mrs. X, it pays the interest to Mr. X. Will it be subject to 40B?
No, ma'am. Mrs. X is
Correct.
not a partner.
So this interest, even though it is paid to Mr. X, who is the partner, but it is paid to partner not for loan or capital of partner, but on behalf of other person. Clear? In his individual capacity. So therefore, in this case, there will not be any disallowance under 40. Clear?
Yes, ma'am. Clear.
What about the share of profit? This is exempt under section 10(2).
10 to
Clear? Yes or no? Fine.
clear. Clear, ma'am.
Next is loss in the case of partnership firm. Now, in the case of loss in the case of partnership firm, if you recollect, we had done one example or we had done one section 78 while we were dealing with the set off and carry forward. So, where there is a change in the constitution of the firm, due to retirement or death of partner. Do you recollect?
Yes, ma'am.
What happens then?
Section for cessation change in constitution shall not be carried forward, right, ma'am?
So, the share of loss of deceased or retired partner shall lapse. Right? However, this applies only to business loss, not applies to.
Unabsorbed depreciation.
Yes. Clear? Fine. And this only is on account of death or retirement, not on account of change in profit sharing ratio or admission of partner. Clear?
Yes, ma'am.
So let's say, for example, if there is ABC firm which had a loss of, let's say, 3 lakh, my profit sharing ratio is 1 is to 1 is to 1. Then in case C dies, the firm can only carry forward loss of
2 lakhs.
2 lakh. Fine. And if there is UAD of 1 lakh, this can be carried.
Carry forward.
78 not applicable. Fine.
Yes,
Yes
ma'am.
or no?
Yes, ma'am.
Fine. Shall we do a question on this?
Yes, ma'am.
Okay. Also, one more important thing before we move further. So, in the case of, for example, the question that we did with respect to that 35 AD for the AMT, right? There again, in that question, if you see, there can also be a question asked like, what if the proprietor, Mr. A, does not want to get covered under 115 BA, does not want to claim 35 AD, or the question says like advise Mr. A that whether he should opt for 115 BAC or whether he should opt out and take the deduction under 35. So, if do you remember we did one question on 115 BAB versus MAT versus normal tax, right? The same thing will be applicable over here. Yes or no? So let's say, for example, if this question was this particular question, right? If I say here, just one line, advise Mr. A as to should he opt out of section 115 BAC, right? So in this case, I will also compute the liability under 115 BAC. How will I compute the liability under 115 BAC? My total income will be 28 lakh, right? Plus, if you look at this question, he had 1614, which is 30 lakh of profit, right? He had a 30 lakh of profit.
Yes, ma'am.
Yes or no?
Yes, ma'am.
So, plus profit from, which is this food grain and sugar business. Thirty lakh less the depreciation. Correct? Even if I don't allow 35D, I will still claim the depreciation under 115 BAC. Yes or no?
Yes, ma'am.
This I'll write as profit from oil. Right? So depreciation is what? 8.5 lakh only.
8.5 lakh.
Correct? So this will give me my total income as 28 plus 30 minus 8.5, which comes to my total income is
49.
49.5. Correct? What will be the tax on this? How much is it coming to? Yes? Yes, faster.
9 lakh 65,000.
9 lakh 65 or 10 lakh 65? I'm assuming you have computed rightly. So let's say 9 lakh 65. Will the surcharge come?
No, ma'am. Less than 50. Plus 4%.
Plus 4%, it comes to 10 lakh 3,600.
Yes,
Now, if
ma'am.
he pays the AMT, it is 23. Right? His tax liability comes to 23. And if he goes for 115 BAC, his tax liability is 10 lakh. So it is advisable that he opts for Correct?
Yes, ma'am.
Right? Okay. Now we will solve one question on the partnership firm from the module. Yes. HIG, a firm consisting of three partners, HING, carried on the business of purchase and sale of TVs in wholesale and manufacture and sale of pen under a deed of partnership executed on 1/4/2014. HING were partners in their individual capacity. The deed of partnership provided for payment of salary of 1,25,000 each to HNG who were working partners. A new deed of partnership was executed on 1st October, which, apart from providing for payment of salary to two working partners, as mentioned in the deed on 1/4/14, for the first time provided for a payment of simple interest at 12% per annum on the balances standing to the credit of the capital account of partners from 1/4/25. The firm was dissolved on 31st March 26 and the capital asset of the firm were distributed among the partners on 28th April 2026. Net profit of the firm for the year ended 31st March 26 after the payment of salary to working partners and debit and credit of following items is 3,50,000. First is the interest amounting to 1 lakh paid to partners on the balance standing to the credit of the capital account from 1/4/2025 to 31st March 26. Sorry. What you will do in this case?
Uh, 142.
Yes.
Interest allowed है ना मैम 12% का ही है तो it is 12%, so it will
Hmm.
be allowed.
It is 12%, but from which date? So if you remember, I told you interest paid, which is in respect of the period prior to the partnership deed, that shall not be allowed as the deduction. Yes. So when
Yes,
was the partnership deed, new partnership deed signed? It was signed on a new partnership deed on 1st October 2025,
yeah.
right? Which provided for this interest of 12%.
So 50% will be disallowed.
Correct?
6.
So for the period paid from 1st April to 1st 30th of September, the interest is paid for that period, 1 lakh. So the 50% of interest will get disallowed. Yes or no? Because the
Yes,
deduction will only be limited to the period from the date of the partnership deed. So interest for the period prior to 1st October 2025 will not be allowed. Are we clear?
yes, ma'am.
Secondly, there is also one important aspect. Here, it provided the 12% interest per annum on the balances standing to the credit of the capital account of the partner. Right? Now, in the second point, if you look at the interest amounting to 50,000 is paid to partner on the balances standing to the credit of the current account from 1/4/25 to 31st March 26. So, what we will do in that case?
It is 12% total capital account, credit account सब आ जाएगा तो this 50,000 will be disallowed because it will go beyond 12%.
Sorry, correct. So, in this particular case, so the 50,000 which is there, right? It is paid to the partners on the balances standing to the current account. But the deed is allowing only for the capital account. Had the deed said, because the interest is the interest allowance under 40B, the disallowance is made in case it is not authorized by the partnership. So the deed should specifically authorize on what balances it is. It can be on all the balances, but the deed should provide. The deed provides only in respect of capital account. So we will only allow for the capital account. Interest paid on the credit of the current account is therefore not allowed. If the deed had provided, we'll allow it on the loan, current, credit, capital, every balance, then it was a different situation. Then we would have allowed this 50,000. Then too, we would have allowed only from the 1st October to 31st March. But here the deed is only providing for the capital. Clear?
Yes, ma'am. तो
Next
मैम
is interest.
डीड
Yes,
डीड में भी लिखा होना चाहिए, अगेन इनकम टैक्स में भी अलाउड होना चाहिए, राइट मैम?
correct. So deed में लिखा है तभी income tax में allow होगा.
ओके मैम.
Interest amounting to 20,000 paid to HUF of partner H at the rate 18% per annum.
नॉट इन द रिप्रेजेंटेटिव कैपेसिटी, राइट मैम? मतलब थर्ड पर्सन को पेमेंट कर रहा है, बट सिंपल एच को दिया है, सो
Yes.
इट इज अलाउड.
Correct. So it will not be covered by 40B because this is paid to HUF. HUF is not the partner. H in his individual capacity is partner. Right? So any interest paid to the third person, right? That is not a problem. In that case, we will not be covered by the disallowance under 40. But still, there is one important aspect that you have to write in the notes to the exam, which is that
Related.
correct. So if the this is a related party, so we have to say that we are assuming that this interest is paid at the fair market value. Clear? The
Yes,
interest
ma'am.
is paid at fair market value and therefore there will not be any disallowance under 48. Payment of 25,000 towards purchase of TV stock in trade made by cross check on 1/11/2025.
Greater than 10,000, it is a cross check, ma'am.
Correct.
So will not be allowed.
Correct. So it is a cross check under 48.3. 100% of the expenditure over 10,000 paid by otherwise than account pay check or electronic mode will be disallowed. Clear?
Yes, ma'am.
Then 30,000 being the value of gold jewelry received as gift from a manufacturer for achieving the sales target.
Business perquisite 28.
Correct. So gold jewelry received as gift is perquisite under 28.4 being a benefit arising from the business. Since it's already credited to the P&L account, no further adjustment is required. Depreciation amounting to 15,000 as per the IT rules on motor car bought and used exclusively for business purposes but registered in the name of H.
Allowed, ma'am.
Allowed? So
Allowed.
depreciation, it is used for my business even though it is not registered in the name of firm. If you remember, we had discussed one case of Mysore Minerals under the PGBP that the registration in the name of the firm is not necessary. Right? So even though it is registered in the name of the individual partner, it is still fine. Right?
Yes, ma'am.
So if you recollect, let me take you to once again back to depreciation class. Asset should be owned by the assessee, even if the legal title is not transferred. Assessee is the beneficial owner. Then in that case, the depreciation will be allowed. Clear? So legal title doesn't matter. Yes or no?
Yes, ma'am.
Fine. Let us move to next part. Depreciation under 32(1)(1) amounting to 37,500 of a new machinery bought and installed for manufacture of pen on 1/11/25 at a cost of rupees 5 lakh.
Allowed, ma'am.
It is allowed.
Additional depreciation allowed.
Additional will be allowed, right? So this is under 32(1)(2), which is the normal depreciation. So this is already debited. There is no adjustment required, but we will allow the additional depreciation on 5 lakh because this is machinery for the manufacturing of the pen. Right? This is machinery for the manufacturing of the pen, and therefore this will be eligible for the additional depreciation. How much will be the additional depreciation?
50%.
Correct. Because this is paid up, this is purchased after and put to use after 1st November, which is less than 180 days. You will allow only 10%, and the balance 10% will be allowed in the next year. Clear? So you have to
Yes.
write that in the examination that the balance 10% will be allowed in the next year. Yes. Interest amounting to 25,000 received from the bank on fixed deposits made out of surplus fund.
Made out of surplus fund, then it will be income from other source, ma'am.
Very good. This will be income from other sources and will be taxable under that head. So you will reduce it and charge it under the head income from other sources under 56. The firm furnishes the following information relating to it. Closing stock in trade was 60,000 as per the method of lower of cost or NRV consistently followed by. The net realizable value of the closing stock in trade was 65,000.
Okay, ma'am. No adjustment because lower of the cost are NRVA. As per AS2, we follow the same like.
No. Again, let me take you back to your PGBP class. ICDS 2. What did we discuss that time in ICDS 2? Can anybody recollect? Inventory, valuation of inventory. Yes? Well, ICDS 2. In case of the dissolution of the partnership, inventory is to be valued at the NRV. This is the exception.
Ek
Otherwise, it
exception.
is cost or NRV, right?
Yes, ma'am. Yes, ma'am.
In this particular case, if you look at the question and read it carefully, it says HIG, which is there, this was dissolved on 31st March 2026. So in the case of dissolution, what you have to do, you have to value the inventory at the NRV. Because the firm is dissolved, now you can't take the lower of it. You have to take the NRV, which is going to be realizable value. Clear? So
Yes, ma'am.
it is 65,000 and you have taken 60,000. So what you need to do is you need to make the adjustment of the additional 5,000. Yes or no?
Yes, ma'am.
So difference on account of the valuation of closing stock and the net realizable value, what you will do, you will add because closing stock will enhance your income. Higher closing stock will enhance your income. So you will add it, right?
Yes, ma'am.
The brought forward loss of business relating to the AY 25-26 was 50,000.
We will set off, ma'am. Brought forward.
But first we'll calculate the depreciation. We'll calculate the remuneration. Clear?
Yes, ma'am.
And then we will allow the brought forward losses because what did I tell you? The book profit for the purpose of the remuneration is the profit as per PGBP computation, and then you need to reduce the remuneration, then you will allow the brought forward loss. If there is unabsorbed depreciation, you will set it off first because that is considered as a current year depreciation. But any brought forward losses, you will not take into consideration for the purpose of determining book profit for the remuneration calculation. If the question would have told you there is unabsorbed depreciation of 50,000, then you would have reduced it and then consider the book profit for the purpose of remuneration. Clear?
Yes, ma'am.
Yes
Clear,
or
ma'am.
no?
Yes,
Now,
ma'am.
what is the remuneration here given? The remuneration is 1,25,000 to HNG who are working partners. The deed of partnership provides for that. A new partnership deed was executed which apart from providing payment of salary, mention the interest also. So interest we have taken care. We have the remuneration of 1,25,000. So what we are going to do is, we are going to calculate like this. On the first 6 lakh, 90%, which is 5,40,000. On the balance 55,000 of the profit, this is the profit coming. It will be 60%, which is 33,000. So it is 5,73,000. Actual salary paid is 1,25,000 each partner, which comes to 2,50,000 to both the partners, right? So I am within this limit of 2,50,000. So therefore, this remuneration will be allowed. Clear? Yes or no?
Yes, ma'am. 5,73,000 will be total remuneration to all the
Correct.
partners.
To all the partners.
Okay, ma'am.
Yes. So here I have to calculate this. Fine.
Yes, ma'am.
Then what about the last one? The fair market value of the capital asset was 20 lakh and the cost of acquisition was 15 lakh. Why is this information given to me?
Depreciable asset
No,
capital gain because the firm is dissolving.
correct. So there will be which section which will get triggered? The firm is dissolved on
50
31st March 26,
section.
right? Section 9B will be applicable. Yes or no? Because the capital assets were distributed among the partner on 28th for 2026. But in which assessment year will 9 be applicable?
In the year dissolution होता है कब वो
No.
in the year
9B
that वो
in the
individual
year
सेल.
in which the capital asset has been distributed to the partner,
Okay, ma'am.
right? So 9B says that it will be the trigger event is the dissolution, right? Which is reconstitution word is used there, correct? So under the 9B, income on the receipt of the capital asset. In the year of the receipt, there will be the 9B getting attracted. So there is a reconstitution, right? Because of this dissolution,
Yes, ma'am.
right? So the trigger point is there. And in that particular case, what is happening? There will be the taxability under that section. Yes or no?
Yes, ma'am.
In the next year, when the capital assets are received by the partner, not in the year of dissolution. And what is the tax? Like, how do you calculate the value under 9B? And under which head it will be taxable?
Income from other source
No, it will be taxable under the head capital gain
capital gain.
because capital assets are transferred. What will be my capital gain?
Fair market value minus cost of acquisition.
20 minus 15, 5 lakh will be my
Right.
capital gain under 9. Clear? Whether
Yes.
45(4) will be applicable? Yes or no? No, right?
No, ma'am.
Why?
45
Because there is a dissolution. And for dissolution, 9B gets attracted. 45(4) gets attracted on reconstitution. Reconstitution means admission, retirement, or change in the profit sharing ratio. Clear? 9B is applicable for both dissolution and reconstitution. Whereas 45(4) is applicable only for the reconstitution. not in the case of dissolution. Clear?
Okay, ma'am. Yes, ma'am.
Fine?
Confusion होता जा रहा है.
Yeah. So for 9B, the trigger point is dissolution or reconstitution. 45.4 gets triggered only in the case of reconstitution. Clear?
Yes, ma'am.
Fine. So that's all. And in the next class, we will be covering the balance provision. So what we are going to do in the next class is basically the AOPBOI. We are going to talk about that. We are going to talk about the cooperative societies as well. So in the next particular class, we'll be finishing the assessment of various entities entirely, right? So today we have completed till partnership firm. Now what will remain is AOPBOI and the cooperative society, HUF, those provisions. Fine?
Yes, ma'am.
Okay. Thank you so
Yeah.
much.
Hello, Prerna.
Yes, ma'am.
Yeah. Thank you for taking the class. And you are not keeping well. Please take care of yourself.
No problem, ma'am. Thank you so much.
So, or students, how you are finding these classes?
अच्छे हैं मैम classes.
Are you practicing the questions which are given in your practice this your study material?
Yes, ma'am.
Okay, okay. So you are referring from the on the website whatever we have posted the study material. So that you have to refer because abhi you will not be getting the latest updated material. Print out आपको नहीं मिला होगा. You have not got that hard copy of those materials. So what you can do, you can just download and take it from the website. On website we have posted the study material which is relevant for May 26 examination. Because for May 26, the Finance Act 25 is relevant for you, and the relevant assessment year 26-27. Right?
Yes,
That
ma'am.
you do. Yeah, yeah. That you do. So, please give your feedback also in case if you feel something which we can add value to these classes so that you find it more, relevant for your preparations and all. So that you please give your feedback. And if those who are not able to join the through Zoom mode, they are advised to kindly join through the Zoom mode. So whatever the queries, now you can directly please take the benefit of these classes because faculty is available here, and you can directly ask the questions if you join through Zoom. Then definitely you can ask the questions. If you are not able to join the complete class due to your articleship or something, so what you can do, you can join at the last of the part so that for the resolving your queries, that you can do because faculty is available one-to-one interaction ke the faculty is available for with you. So and then you can definitely take the benefit of these classes to the fullest and can do your preparations well. So those who are attempting the May 26 examination, you please join these classes only through Zoom. It would be definitely better for you. Yeah, Prerna, what you can do if you can give some MCQs every day. So
Okay,
whatever
ma'am.
you have covered, na, you can just give them the MCQs.
Okay.
That we
Sure,
can,
ma'am.
I think, do. Hai na? Yeah.
Sure.
So next time we will try to give the MCQs also
Sure.
for the content which we have covered in the respective classes. That we can do. Yeah. 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 Thank you, Prerna. Thank you so much.
Thank you so much, ma'am.
Yeah. Thank you, students. Good night.
Yeah, we can close the session. Yeah.